Hi, everyone. Welcome to our event. We are so glad to have you joining us this evening. And we are excited to talk to you about Money Matters, brought to you by Pimo Community College and the First Year Experience Program, as well as the Office of Financial Aid and Scholarships in partnership with One AZ Credit Union. Tonight, we are going to be talking about credit scores. But while we give everyone some time to get logged in, let's go over some housekeeping tips to make sure that we are all on the same page and we have a smooth session together. First of all, we do ask that you please make sure that your Zoom profile is showing us both your first and last name, as well as your pronouns if you wish. That way we can get to know you a little bit better. If we need to call on you for any questions, we know how to refer to you. But perhaps most important of all, this is going to be what makes sure that the proper person gets attendance credit for being here today. Now, if you're not quite sure how to rename or update your Zoom profile, there's a couple of different ways to do so. First option is by looking down at the bottom of your Zoom toolbar. Click on the tab that says Participants, and then you should see a pop-up window appear on your screen with your name at the top of the list. Check to make sure and see if it's showing us that first and last name. And if you need to update it, then hover your mouse next to your name on the right-hand side, and you should see three little dots appear. Click on those, and then it will give you the ability to rename or update your Zoom profile. Another way to accomplish that same task is by going down to that bottom of the Zoom toolbar and making sure that your video icon is enabled, or just looking at the webcam tiles that you should see across the top of your screen. Again, yours should be the very first tile that you see, whether or not you have your webcam turned on at this moment. But when you hover your mouse in the top right corner of your Zoom tile, then you should again see the option to rename your Zoom profile appear. Now, if you're having any challenges or technical difficulties doing that, you're also always welcome to send me, Renee Forsyth, a private message through Zoom chat to let me know how you want your name to appear, and I will get that updated for you. Now, please be aware that the session is being recorded for educational and promotional purposes so that we can show other students who are not able to join us live all the information that we had to share about credit scores. That recording will also be made available to you afterwards so that you can watch it and replay if needed to reflect on everything that you learned. Now, if you do not want to be part of that recording visually, you are welcome to leave your camera off. There will still be plenty of ways for you to engage and participate throughout tonight. However, if you want to leave that webcam on, we welcome and encourage you to do so. We love putting faces with names and seeing everyone who's joining us tonight. So I'm seeing Ariana with us. So good to see you. There's Simara and Juanita. Thank you so much for joining us, everyone. All right, now please be aware that captions will be available and provided throughout tonight's event. If those would help you so that you can follow along while learning, you can enable them by going down to your Zoom toolbar, clicking on the option to either show captions, or if you're not seeing that tab, look for the tab that says More with three little dots. And when you click on that, it will give you the ability to either show captions or enable transcripts, etc. Now, we want to make sure that this is an event where everyone can easily follow along and be able to hear the speakers. So we do ask that you please make sure your microphones are muted unless you are being called upon or you're intentionally speaking in that moment. That way we get it. If something happens beyond your control, like let's say the dog starts barking or someone comes into your office and they don't realize you're in a meeting, this way we can all still be able to hear the speaker without interruption. But we want this to be a fun space where you get your questions answered. So at any point throughout tonight's presentation, if you have a question, please make sure that you bring it up and you ask us in the Zoom chat box. We are going to be monitoring that throughout tonight's event, and there will be a question and answer period at the end where we field your questions to our speaker, Vanessa, so that she can answer them with her expertise. Now, in addition to wanting this to be a fun space where you get your questions answered, we also want it to be a safe space. So we do ask that you please make sure to keep all conversation respectful, civil, and clean. And we thank you for that. Also, please be aware that at the end of tonight's activity, we will be sharing this bit.ly link with you through the Zoom chat so that you can complete our feedback survey. Not only does that accomplish exactly like it sounds, allows you to give us your feedback, but even more importantly, that's going to be how we make sure that you are with us for the entire event so that you can get attendance credits. Anyone who completes that survey will also get a certificate of completion sent to them afterwards. And that will also get you entered in our ultimate drawing for a $250 tuition award. So for anyone who attended both Money Matters events this semester, stayed for the entire presentations, and completed both of those feedback surveys, you will be entered in that drawing to win the $250 tuition award, which you can use towards summer or fall 2023 student accounts. But in addition to that opportunity, we're also going to have a prize drawing for those who follow us on our social media accounts this evening. So we have some special Pima specific swag items to share with you to help get you in the school spirit. So if you follow the @Pima FYE accounts on Instagram or Twitter, that will be one way that you can get entered in that social media prize drawing. And then if you follow the handle @Pima.financialaid.scholarships on Instagram, that will be another way that you can potentially win those prizes. So there will be 2 winners announced at the end of tonight's event, one for each of those social medias. So take time to follow us now so that you have a chance to win those prizes by the end of tonight. And then lastly, our fantastic partners with One AZ Credit Union have their own special prizes to give away. So later on throughout this event, Vanessa will share what those prizes are and the ways that you can get entered to win them. So as I have alluded, it takes a wonderful team to plan this event. And so I want to take a moment to introduce who we are. For those who I have not yet met, my name is Renee Forsyth. Again, my pronouns are she, her, and hers, and I lead the first year experience program here at Pima Community College. And I'm going to hand the mic over to Carla and our other teammates from financial aid.
Thank you, Renee, and welcome everyone. Good afternoon. My name is Carla Gonzalez. My pronouns are she, her, and hers, and I am the Assistant Director for Scholarships and Outreach. And along with my awesome Scholarships and Outreach team, we are also helping facilitate this program. So with that, I'll pass it on to my team member, Juanita.
Hi, everyone. Welcome. We're glad you're all here. My name is Juanita Bonillas, and my pronouns are she, her, and hers. My title is the manager for the Second Chance Pell program, but I also participate in our outreach, including this event. So I hope you all enjoy. Thank you.
Anna, will you introduce yourself?
Good afternoon, everyone. My name is Anna Brown. My pronouns are she, her, hers. I am the coordinator for scholarship operations. I am super excited about today's event. It's wonderful to learn about credit scores, so I'll be learning along with all of you. So welcome.
Hi, everyone. Welcome. I'm excited to be here with all of you as well. My name is Simana Duarte. My pronouns are she, her, hers. And I'm the program coordinator for Outreach and Scholarship Database Operations at the Office of Financial Aid and Scholarship. And I'll pass it to Vanessa.
Good evening, everybody. My name is Vanessa Alfaro, and my pronouns are she, her, and hers. And I'm our Southern Region sales leader here for the credit union. Cover the Tucson and Safford areas, and I am so excited to be back doing another presentation through this partnership. Thank you.
Thank you. All right, so as we mentioned, tonight's featured topic is going to be credit scores. So to give you a taste of what this topic involves and what we're going to be going over tonight, we have a brief video to get things started. Let me get that queued up.
If a friend asked to borrow $100 from you, would you do it?
You're probably thinking, that depends on the friend. Are they trustworthy? Have they borrowed money from me before? And if so, did they pay it back?
Borrowing money is as old as civilization itself, and for a long time, it was based on personal relationships and recommendations. The only way for a lender to know whether they could trust someone to pay them back was by knowing them personally, or if someone else they already trusted vouched for them.
But when credit became big business, lending companies needed a more efficient way to decide which borrowers they could trust. So in 1956, a data analytics firm called Fair, Isaac & Company started creating mathematical models that used a borrower's history to measure their risk. And in 1989, they debuted the first industry standard algorithm, FICO score. This formula was soon adopted by the big three credit reporting bureaus, Equifax, Experian, and TransUnion.
Your FICO score is a 3-digit number between 300 and 850 that indicates to a lender how safe it is to lend money to you. A high score tells a lender you'll probably pay the money back on time, so they're more likely to give you a loan with good terms. A low score signifies that you might not be able to pay the money back, so if they're willing to offer you credit at all, they'll want to be compensated for the risk by charging more interest.
But it's important to remember, this number doesn't represent who you are as a person, or even whether you are financially responsible. There are people with high credit scores who live paycheck to paycheck, and people with low credit scores who save like little chipmunks.
Your credit score only reflects your past relationship to debt. Every time you borrow or repay money, like taking out a credit card or making a student loan payment, the lender reports that activity to the credit bureau, where it goes into the math machine. But not all data is judged equally.
The largest
All right, so again, we just wanted to give you a taste of some of the topics that we will be covering. So without further ado, I'm going to pass the mic over to Vanessa so she can tell us more.
Thank you, Renee. Yes, that was a great overview into what we're about to dive into. But before we go through the roadmap of all things FICO and credits, we're going to start by going over a few of the reasons why FICO scores and credit is so important to understand. Some of this content was also helped created by our partners GreenPath. They're also a great resource if you ever want to check them out online. But we're going to dive into some of this information here. So why is credit important? Okay. All right. One of the first big reasons why your credit is important is landing your dream job. So you could potentially be held back from a job opportunity, or this could also help you get your dream job. But 60% of employers today will check your credit score or report prior to offering you a position. So 60%. Now, let's say you applied for that job, you interviewed, they ran your credit, and now you have to explain certain things on your credit report or score. This doesn't mean that you won't get offered the job or you won't be able to start, but you might have to provide letters of explanation or create payment plans with those lenders that you still owe or have outstanding debts to, or maybe judgments to, before you can actually obtain a position with an employer. So it's definitely one of the big reasons today why you want to maintain a good score. The other one is the obvious reason, which that video alluded to. Good credit can also help when applying for a loan when you need it. It also can help make sure or ensure that you get the best rates possible. So definitely important to maintain that good credit score if you're looking for approvals and you're also looking to save money when you do need to borrow. One of the other reasons is renting or buying your own home. So if you go to rent, a lot of leasing companies are going to pull your credit. This doesn't mean that you won't be offered a rental or that you won't qualify, but you may be asked to pay thousands of dollars in fees up front, additional rent to secure the risk there with a rental company or leasing company when looking for a rental property. It can also impact you when you go to buy your home, causing higher interest rates on your mortgage. So we're going to jump into a scenario here where you might see the difference, or where you will see the difference in having a good credit score when buying your first home versus maybe having an average or lower score. So let's take a look at this scenario to explain away one of the reasons why it's good to maintain that credit score. So we have two applicants here. One is Diego and one is Angela. Angela has a 750 credit score. Diego has a 660. Now they're both applying and qualified for a $250,000 mortgage at 30 years. But because of Diego's 660 credit score, his interest rate is 5.25%, where Angela's is 4.63%. Now, these are not today's mortgage rates, so please know that this is just an example. But in this scenario, Angela received the better rate due to her 750 FICO score. Diego's payment was $1,381. Angela's was actually about $100 less at $1,285 a month. And over the life of the loan, Angela paid $462,726 in principal and interest. Diego paid $496,984 in principal and interest. So in this scenario here, Angela, due to her credit score, saved $34,258 over the life of this mortgage loan. So when you look at these two scenarios, $100 a month might not be that much of a difference to you, depending on what your situation is. But over the life of the loan, when you combine the savings, it's $34,258. So a significant savings there for Angela, just based off of the FICO score and maintaining a good credit. Okay, we're also going to talk about what's on your credit report. There are 3 credit bureaus: Experian, TransUnion, and Equifax. Information on all 3 of those credit bureaus is going to be your identifying information. Your legal name, that can include any name changes that you've had along the way, your social security number, your most recent or previous addresses, all your identifying information. Now, your identifying information does not factor into the actual score itself, but it's definitely important that you make sure that it's current and up to date and accurate. On your credit report, you're also going to see a history of your open accounts, even your closed accounts, collection records, inquiries. Those are those inquiries every time you apply for new credit. Those do show up, whether you open the account or not. And consumer statements. So any disputes that you have going on, any responses that you've had to some of those accounts, that's all going to be a part of your story on your credit report. Okay, it's important to review your credit report periodically. There are a lot of different ways to do this. One of the best resources is going to be annualcreditreport.com. This is a free tool. Once a year, you can pull a free credit report off of this website. That would be the easiest way to do it, or you can request one by mail. There's no charge for this. When you go onto this website, they're going to ask you some personal information to identify who you are and verify that it's actually you. And you'll be able to maintain a copy or obtain a copy of your annual credit report to ensure that everything is accurate. All the information that you have on there is up to date, including that personal information, your identifying information. Now, that website is not the only tool, so I'm not really going to get into what it costs to pull your score. But if you did use that website, you have some other options to pay for scores outside of the credit report itself. But there are other tools now that you can use, and we'll go over those later in the presentation. So here's where we get into some of those tricky facts versus myth scenarios. And a lot of the time I get asked about how long do items actually stay on your credit report? And here's some good information for you to know. 2 years. So inquiries, we just kind of touched on those there. Anytime you apply for new debt, your inquiries will stay on your credit report for about 2 years. If you did an inquiry today, it might have a bigger impact than it would a year from now. Over time, it starts to impact your score less and less. But it is definitely important that you have minimal inquiries. A lender typically likes to see an average of maybe 2 a year, but those will stay on for about 2 years. 7 years. This is the biggest one that I hear. The account was closed. It's going to drop off after 7 years, or I just made a payment. It's going to go away after 7 years. But there are some different factors that play into that time frame. So late payments, collection accounts, foreclosures, Chapter 13 bankruptcy, those are all 7 years. Now, Chapter 13 bankruptcy is actually closed out 7 years after that final payment. So from the time that you completed that program or that plan, that history is still going to maintain on your credit report for about 7 years. And a lot of the time, you actually have to file the dispute to have some of these accounts removed. One of the items on here, collection accounts, is what we most often see that needs to be disputed. Because these items stay on your account or your credit report for 7 years after the last payment or change or update, collection agencies will often sell these accounts to new collection agencies, and that 7 years typically will start over. But that is not accurate. So you can actually dispute that from the time that the first collection agency bought that account. So please note that. And then about 10 to 20% of borrowers actually have errors on their credit report. So definitely make sure you're taking a look there. 10 years. So Chapter 7 bankruptcy will drop off or have less of an impact or no impact at all after 10 years of being on your credit report. So hopefully that provided some clarification on some timeframes for all of you. So there's some good news after that negative news. We looked at all the bad things that might stay on your credit, but the positive pay is actually on your credit report indefinitely. So you'll see that for as long as the account is open. What we might not see stay on, even with positive payment history, is if you close an account. So if you paid off your auto loan, all those on-time great payments might go away after 7 years of your last payment, but it's still good history. It still stays on your credit report as long as that account maintains in good standing and open. Okay. If you do need to dispute an item, make sure you're keeping records and copies of your documents for any final payments that you've made, any agreements that you've come to with lenders for repayment programs. Make sure you keep all of that information available in case you do need to file that dispute. Most disputes on your credit reports can be filed directly with the credit bureaus, Experian, TransUnion, or Equifax online, by phone, or even by mail. Okay, now we're going to get into how these credit scores are calculated. And I get a lot of questions about what truly impacts your credit score and how much and for how long. So we're going to go into some of that information here. Kind of touched on this lightly. The credit score is a 3-digit number that reflects your credit risk and your likelihood of repayment. So again, it's telling us lenders how likely you are to repay your debts or any monies that you've borrowed. And the FICO is the most widely used scoring model. 580 or less, you're considered higher risk. All the way up to 800, which is considered excellent. And we'll go into what that means for you depending on where you stand. Well, let's go into a breakdown here. So nobody really knows the true calculation or how much your credit score is actually going to drop based off of one change to your credit report. But what I can do is give you a pretty good idea of how to maintain good credit and some good helpful tips to help bring that score up and show you what mostly will impact your score with a change. So the biggest portion or chunk that can impact that FICO score is going to be your payment history. 35% of your credit score is based off of good payment history or bad payment history, late pays. Your score can significantly drop just based off of one late payment. Now, one thing that I get asked a lot is, So if I'm 10 days late, how much will my score drop? Well, actually, your lender might have a 10-day late fee based off of your agreement in your terms of your loan or your credit card. But on the credit report or FICO, it's actually 30 days before it'll be reported late to the credit bureaus. So I never encourage you to pay a payment late, whether it's 5 days, 10 days, because you're going to be paying additional interest. But you do have 30 days before it does negatively impact your credit score. Now, you might still get those fees, but 35% of that is impacting your FICO score. This can drop significantly. It could be 30 points, 40 points if you have one late pay. Now, we talked about these being on your credit report for 7 years, but over time, this will not have as great of an impact on your score. So if you're late 30 days tomorrow on an account, you might see a drop of maybe 30 points, and that's not an exact, but just an example. But then maybe 2 years from now, it's only bringing you down maybe 15, 10 points, because over time it impacts your score less and less. But it is the biggest piece of the pie when it comes to maintaining a good credit score. The next impact or biggest impact or piece of the pie is going to be your amounts owed basis or versus the available credit that you have. So lenders typically like to see that you only have 30% of all your available limits utilized at one time. Once you exceed that 30%, your score can drastically decrease. And that could be, again, 30 points, 50 points, depending on how much utilization you have. But the good rule of thumb is to stay below 30% of all of your available credit lines. This does not include auto loans or mortgage. This is simply the revolving lines of credit, your unsecured line of credit, maybe with your lender, definitely credit cards. So let's say you have a $10,000 credit card balance, or limit. You want to make sure that you don't exceed $3,000 of that available limit, or it can definitely have a negative impact on your score. Now, let's say you have 3 credit cards with a $10,000 limit. On one of your $10,000 credit cards, you have a $9,000 balance. You take the total combined for all 3 of those cards to determine what your 30% would be. In that scenario, you're still at the 30% mark based off of all 3 of those $10,000 limits combined. That $9,000 keeps you where you need to be in order to maintain a decent credit score. The next one is going to be length of history. This is another one where we get a lot of myths on, and what I hear. Never close out a credit card unless a lender advises you to do so, or you have a severe, significant reason to do so. The worst thing that I've seen out there is a member comes in excited because they felt like they were responsible. Guess what, Vanessa? I paid off all my credit cards last month. They're all closed out. I'm ready to do that auto loan. All of their history and their story is the repays are good. The 7-year history is going to stay there. But because now they do not have any open current accounts, it's going to bring their score down. That's 50% of their score. 15% of their score is based off of the length of history. So now they've closed that account that they've had for 15 years out, and their score has dropped 20 points or sometimes even worse. There are times where a lender might ask you to close out a credit card, and that might be because you're applying for a mortgage and you need to close that card out in order to qualify. But a lender will let you know if you need to close a card out. So make sure you maintain long history so that we can show that a lender has been able to lend to you for a long period of time without any issues, and that you're a good borrower to have. Don't necessarily close out all your cards to think that this is going to be a good thing or that this is going to help your score increase. This can actually have a negative impact. Of your FICO score is based off of the types of credit you have. Lenders like to see that you can be responsible with unsecured debt, as well as handle larger balances like auto loans and mortgages. So the more of a mix that you have, and good repay history, 10% of that is going to make up your good FICO score. And lastly, we have new credit. That also goes into your FICO score calculation. What I have seen in the past is somebody is really, really excited because they just started to establish credit. and they start to get approved for everything, and they start to accept every offer that comes their way. So when they're standing in the line at Ulta, or they're at Lowe's or Home Depot, and they're saying, guess what? You're pre-approved for a credit card today. You could save 20% on your purchase. And somebody says yes to every offer that comes their way. That can actually have a negative impact on your credit because it starts to look like a flag to a lender when you open multiple accounts and you have high utilization. So be careful with the amount of new credit that you have. And again, that goes to the inquiries as well. Okay, now I am not endorsing Credit Karma at all. There are plenty of different apps and resources out there. Many of you have asked me about Credit Karma, but this is a way for you to do a quick check and get an estimate or guesstimate on what your FICO score might be. But these days, there's a lot of different apps out there that you can utilize. And please note that Credit Karma, or if you have an Experian app, or most credit cards these days have a FICO score and credit report complimentary built into your credit card app. Those do not count as inquiries. If you are checking your own score and your own report, it is not considered a hard inquiry to a FICO. Sorry, guys. I'm the one with the dog barking again this time. Okay. So now we have Diego and Angela. And just based off of some of those scenarios that I just went over, you can see Angela's scenario here. She has a credit card with a $5,000 balance with a $10,000 limit, and she pays a minimum payment every single month. Now, Diego has a balance of $800 with a $1,000 limit, but he pays his entire balance off every single month. Now, Angela's limit is much higher. Diego's utilization is much higher. But in this scenario, Angela has the better credit score because of her utilization here. Now we're going to talk about building credit. There are many different ways to build credit. So if you are just starting off, or maybe you even need to repair your credit, definitely talk to your bank or credit union. There are a lot of different options out there. One, they can review your credit report with you and start giving you a good idea of what you might need to pay off. I had one member who just started out, got their first credit card, I think through Capital One. They had a $300 limit. They thought they were doing the right thing, building a credit score, and they had a $200 balance. Well, they were exceeding that 30% utilization, but they had the money sitting in their savings. They paid that off and their credit score went up several points. But if you don't have a credit card right now that you can work on rebuilding or building your credit with, you can look at secured options. So you might have heard of secured credit cards or secured loans. You definitely want to talk to your lender about these options if you are looking to build or repair. This is where you use your own savings and your own money, and you basically borrow from yourself. You might be thinking, Vanessa, why would I do that? Why would I want to borrow from myself and pay myself back interest or pay myself payments? This is because this shows a lender that you can responsibly make payments back. And even though you're paying yourself, these typically are reported to all 3 credit bureaus, showing your story and your history. And now you're starting to build your own credit score. And you're showing that positive pay. If you don't want to go the secured route, you can often go to a retail store or gas station. And those typically are good starter credit cards. But again, you want to be very, very careful taking out those retail cards and not using them, maybe making one small gas purchase a month and paying it off right away, because you can quickly get yourself into trouble there. So do be careful with those. You can also look at co-signer options. So if you have somebody in the same household that is willing to go on your first auto loan with you, or maybe get your first credit card with you, you can definitely look at that option in order to apply for your first loan or your first credit card. But you do have to have somebody willing to take that responsibility, saying, well, if this person doesn't pay, then I'm going to be responsible for this payment. And that's why a lender would take that chance. You can also be added as an authorized user on someone's existing credit card. Now, this is one that I actually just did for my daughter. She's 18 years old and has a 700 plus credit score because I added her to one of my longest standing credit accounts. So this is definitely an option. So if you have somebody in your household, whether it's a spouse, parent, maybe a sibling, and they have a good credit card history, they might be able to add you as an authorized user to help you immediately start building credit. So here are some of the options for you to look at with your lender. And I'll definitely be able to answer some of the questions that you might have around building credit here later in the chats that you've been putting in the chat. Okay, so as we mentioned earlier, retail cards, you can quickly get into trouble. I've definitely seen people that have accepted every offer and they have about 10 new credit accounts within the first year of establishing credit. We definitely want to stay away from doing that. And you also want to have savings as a backup to be able to pay off those balances and also use that for your emergency funds versus getting into debt and having these credit cards that you can't pay off every single month. So have your savings. We usually say about 6 months of your expenses in a savings account is a good rule of thumb. Charge per month. So you do want to have active credit cards. We can't see your story if you take out a credit card and you don't use it for 2 years. And in some cases, a lender will actually close you out if you're not using that account. So do try to make at least one charge per month, but set it up on an automatic bill pay. And then also maybe even have one of your automatic bill pays set up. So maybe you have a utility bill versus having it come out of your checking account, maybe link this to your credit card. You might earn some points doing that, but also make sure that it's set up to automatically pay from your checking account. So you're paying off that bill every single month, and you're also establishing good repay history. And again, using 1/3 of your available credit. Again, those store accounts, we are in a world of instant gratification these days, so please hold off on buying that big flat screen TV. Really, you should only use credit if you absolutely need it and it's an emergency. Again, something like student loans, buying your first vehicle or needing a vehicle, and also buying a home. Or maybe major medical expenses, but definitely be careful with your utilization and make sure you're staying under that 30% of all of your total limits available. Okay, and when you can, pay off those entire balances in full to avoid those finance charges, because the longer you carry those balances, the more interest you're going to pay. Check with your lenders, but typically you'll have a promotional rate on a credit card, and then it'll go to something like 20+%. So be very, very careful with those credit cards. You're going to end up paying excessive finance charges. That one small Starbucks purchase can end up costing you $50 over time, depending on the interest rate that you have on that card. And same thing for vehicles. Try to pay down that balance as soon as possible so that you're not paying interest on those larger balances throughout the life of the loan. And again, check your report and your scores regularly. 10 to 20% of credit reports do have errors. So it is important that you are making sure that you're filing those disputes or that you're ensuring that your accounts are actually being reported. So if you have something that might be reporting on Experian, but it's not showing on your TransUnion, you'd want to make sure that you notify TransUnion that you do have an account that's missing or payment history that is missing. I've also seen people with similar names have accounts show up, especially when it comes to collections for other borrowers. So please check your credit reports periodically and make sure that you don't see anyone else's information on your credit bureau or that's affecting your FICO score. Hey, miss again. Closing a credit card will hurt my credit score. Okay, we went over that. Necessarily, you want to talk, not necessarily, you want to talk to a lender to see how much that's going to impact you. Now, if you close a credit card out that you just obtained 30 days ago, it's probably not going to have as much of an impact as if you were to have an account open for 20 years that you decided to close out. But definitely talk to a lender and have them review your report with you if you want some clarification on whether or not you should close or keep an account open. Okay, and then the utilization. We have two scenarios here. Sarah, she has 3 maxed out credit cards. She paid off the first card, decides to close it to remove temptation, and 2 cards remain maxed out. In Katie's scenario, 5 accounts, open accounts, all balances at 0. or close to zero and decides to close a newer account to avoid the annual fee. In Katie's scenario, or both of these scenarios, they're both not in bad shape, but it could impact their scores differently. However, with Sarah, because she has those 3 maxed out credit cards, she decided to close one out. It also impacted her utilization ratio. And now she has a negative impact on her credit score. Versus Katie, who has little to no impact because all of her balances are at 0. And she closed out her newest account. And in her case, this might be a good reason to close out an account. You might be receiving an annual fee. So definitely we want to make sure you save money. And if it's going to impact your score, it might be worth it if you are paying fees when it's not necessary. Okay, checking my credit score will hurt my credit score. If you check your own credit, like I mentioned earlier, this does not count as an inquiry. This is something we do encourage, and you can check with your bank. They might have this available to you. I know we have an account that offers this. Credit cards that you already have open might have this already built into the app, or you might have something like Credit Karma or Experian that you check on a regular basis, but none of those should impact your credit. An inquiry will only count if you are applying for new credit, or maybe looking to lease an apartment. Also applying for a job that will not impact your credit score, that does not show up as an inquiry. That is considered a soft inquiry and will not hit your credit report. Okay. Okay, things that will not change your credit score. Applying too often can hurt your credit. I want to talk about something though here, because what I have seen is if you go into your lender or your bank or your credit union and you want to get pre-approved for an auto loan, that counts as one inquiry. When we talk about multiple inquiries, some of you may have gone into a dealership and you see that you have 20 inquiries overnight. That actually counts as one inquiry because the credit bureaus can see and they encourage you to shop around for the best rate. So if you have a dealership that runs you through multiple lenders to get you the best rate, it's not going to show up as 20 inquiries or impact your score as if those 20 inquiries all took place at different times. We do encourage you to get the best rate. So you typically have about 2 weeks in between that initial inquiry before it starts to count as additional. So to better explain that, if you go into a dealership today, maybe you don't find the vehicle that you're looking for, you wait another 30 days, you go and apply again. Now that's another inquiry. But if they do run your through their system, through multiple banks, those 20 inquiries will not show up as 20. It'll only count as 1. Or if you're applying for an auto loan today, and then next week you apply for a mortgage, those are 2 different inquiries because those are 2 different types of credit. But applying too often can hurt your credit. So be careful to only apply when you're truly ready. So if you are taking 6 months to find that vehicle and you're applying for new credit through a dealership every 30 days, those are going to count as multiple inquiries. A checking account is considered a soft inquiry, so that should not have a negative impact on your score. Okay, and now we're coming to the end of the presentation, and Renee had mentioned earlier that we also have some prizes through our partnership to give all of you. So if you are able to, go ahead and scan this QR code. You do not have to be a member for this. You do not have to have an account with 1AZ Credit Union, but we do want to hook you up for attending our presentation through this partnership. And you have the chance to win a $50 Office Max gift cards towards those student supplies, and also this really cool Adidas backpack. So if you scan that QR code, it's going to take you to our website in order for you to register. That registration will be open until April 11th at 5 p.m. and we will do our drawing on April 13th. The total value of this prize is $100 and it can be picked up at our 1AZ locations, depending on what's convenient for you. So feel free to scan that QR code or just visit the website that was listed in the chat, and it should take you directly to the registration link. And our last offer that we have through this partnership is giving back to you as students. So if you do decide to become a member or you want more information on opening up a checking account, you get $100 for being a student of Pima Community College when you do open that membership or start that relationship. And if you have any questions about that, you can also look that up online through that QR code. There should be some information on that page. So we'd love to have you as members. And now I think I could answer some questions now that we've completed the presentation and overview of understanding credit.
Thank you so much, Vanessa. This was great information. Actually, before we start with some questions, we have some questions for all of you. So we're going to go through a quick activity just to practice what we learned. And by the way, I know you mentioned some myths that I thought were, or you actually clarified some myths for me about credit scores. And so that's just amazing information. Thank you once again. All right, so we're going to go ahead and participate or do an activity via Menti. So if you don't mind, go ahead and we'll give you a few minutes here just to get ready. You can scan the QR code, or depending on your device, you can go to www.menti.com. And once you are there, go ahead and enter the code 93457379. Again, I'll repeat the code 93457379. And then you can go ahead and answer and participate in that manner so we can see some of the questions. So the way this is going to work is I'm going to pose a question. You'll have some time to respond, and then Vanessa will provide some guidance regarding why it's a fact or myth. Okay, so all right, awesome. I think we're ready now. So let's go ahead and move forward. Our first fact or myth: you should check your credit report from each of the 3 main credit bureaus at least once per year by requesting copies from annualcreditreport.com. Myth or fact? And if I had some music, I didn't cue in, but I'd have some really like drum roll or something. All right, so it seems like most of you have responded, and the answer is myth or fact, and that is a fact. You are correct. You should at least request your credit score, not at the same time, but at different times from once per year from each of the 3 credit bureaus. But Vanessa, do you want to go ahead and add a little bit to that?
Yes, this is again the information that we shared in the presentation, but again, that is free on the annualcreditreport.com. But again, there's also many other resources, but definitely a good idea to make sure that there aren't any errors and that everything is accurate and that your credit score is in good shape at least once a year.
Thank you. All right, good job. So next question, everyone, or myth or fact: as long as you do not have any debt, you will have a high credit score. Myth or fact? What do you all think? Most of you are thinking myth. Let's see. All right, that looks really good. All right, well, that is correct. It is a myth. Just because you do not have any debt doesn't mean you're going to have a high credit score. Do you want to share a little bit more, Vanessa?
Absolutely. This is definitely a myth that is painful to relate to members. Again, if you close everything out, we don't have a story. So make sure that you are using some of your debts, making those payments on time, and that you also look to establish, even if you don't feel like you need credit. What we've seen in the past is people will pay cash for everything. Doesn't mean that they're irresponsible, but we don't have a story to tell or any history to really go off of if you don't have any credit outstanding at all.
It's like you mentioned the story, your personal story where you shared a credit card with your daughter to give her that length, right? So that's a good option.
Yes. And, we've actually had members that have had, I had one guy, actually, I'm just going to tell a scenario on this one. He had multiple savings accounts with us. He probably had over $100,000 in balances with us. And he's like, I'm old school. And we hear this all the time. I pay for everything in cash. Look at my balances. And we wouldn't even give him an auto loan because he had a 0 for his credit score. So it's not always the best thing, to pay only in cash and stock away your cash. But if you speak with your lenders and your advisors, they're going to direct you on the best way to go to help you have some type of credit history. So if you ever did have an emergency or you needed to make a big purchase, you can do so.
Thank you. Thank you for that. That's a good scenario as well. All right. So everybody ready for the next one? All right. So myth or fact? The only way to improve your credit score is to pay off your entire balance every month. Myth or fact? All right. Seems like we're weighing on the myth. Is it? Is it a myth or is it a fact? All right. Okay. Well, it's actually a myth. So you don't have to pay your entire balance every month, but you should pay, your balance every month. Don't not pay. So Vanessa, go ahead and share some more insight.
Yes, there are a lot of different tricks and tips to improving your credit score. You might not have the funds to pay off your entire balance, and that's okay. Maybe you start looking at what 30% of your limits might be, and maybe you make smaller payments to get it down to that 30% utilization. And believe it or not, opening up a new credit line can actually increase your credit score. So let's say you have a $10,000 credit card, you're at a $4,000 utilization. Now you're at 40%, putting you over the 30%, but doesn't mean your credit score is a bad credit score. You can actually apply for a new credit card account. And with that new limit, it'll put you back under the 30%. So there are little things that you can do to improve your credit. Making payments on time, doing disputes, paying off your balances completely every month is not the only way. It's a good way, but it's not the only way.
Thank you for that. All right. So number 4, myth or fact. If you pay off your entire credit card balance in full every month, you will hurt your score. You must carry some balance from month to month. Myth or fact? Vanessa kind of just gave us the answer too. All right. Most everybody's gearing towards myth and a couple. All right. All right. So actually, it's a myth. So I'll let Vanessa explain a little bit more.
Yes, this actually is one of those things that I touched on earlier in the presentation. A lot of people will say, well, if it's dormant or I pay it off every month, then I'm in good shape. But you don't have to actually have to carry a balance to keep that open. As long as you have some type of transaction, if you pay it off every month or you maybe use it once a year, you'll still have a good credit score. You don't need to pay it off and you don't have to carry a balance. You just want to keep that account active, because if it doesn't stay active, it can actually close out.
Okay, thank you. That's a good explanation. Thank you. All right, so ready for more? So number 5, myth or fact? You can eliminate negative parts of your credit score by closing accounts that are overdue. Can you do that? Myth or fact? I'd start like humming a tune for you all just to add suspense, but I don't think you want to hear that. So I'll refrain from doing that. All right. Okay. I think most of you, let's see. Oh, seems like most of you are gearing towards myth. All right. So actually you are correct. It is a myth. So closing your accounts is not the answer, but I'll let Vanessa share a little bit more about that.
Yes, it looks like we have experts. So they must have been experts before they joined the call, because everybody's doing a great job answering these questions. But if you remember to that point in the presentation, just because you close an account doesn't mean that it drops off. That negative history can actually show on your credit report for up to 7 years from that last payment. So it doesn't completely wipe the account out. So definitely make sure you pay those payments on time and you don't have any of those collections hit your credit report.
All right, great. Thank you for that. All right, next one. So myth or fact again, it's possible to have a high credit score even if you don't earn much money. Fact. Okay, that was quick. Is that true? Good. All right. So go ahead.
I'd say that's absolutely true. You can live inside your means. If you're on a good budget, you're making your payments on time, you don't overextend yourself on credit, you can absolutely maintain a good score or an excellent score, even in the 800s, depending on how well you manage your budget.
Thank you. So, Vanessa, would you say like college students who maybe have a part-time job could still, in this case, even they might not have much income, but they could still be building their credit, right? Because I've heard a lot of college students, and myself being a college student once upon a time, that, you know, it was kind of a common thing to think, oh, well, I'm in college. I'm expected to not have a good credit score because I don't make enough money. So would you say definitely, you know, that's not the case?
That's definitely not the case. I'm going to use my daughter again. I'm actually a little jealous of her because I think she even at one point had a better score than I did. And she probably works 1 day a week. So she's very young, but it's up to you. She's making her payments on time. She took the steps of getting a shared secured loan as soon as she turned 18. And she has not used that credit card balance or exceeded that 30% utilization where she's an authorized signer. So it is definitely possible to have an excellent credit score, even if you don't earn much income.
Thank you. And just to kind of shout out to this team, especially Vanessa, for also earlier in the semester, we had a budgeting, or earlier in the year, I should say, a session about budgeting. So if you're, wanting to learn a little bit more, okay, how can I help my credit score if I don't have enough funding, but I need to learn how to budget my funds? We do have some information. Actually, one of the sessions is pre-recorded as well. So we can share that in a while with you all, but definitely budgeting is a good way to get to this point as well. Okay.
I do want to make one more note. Thank you for that, Carla. Yes, that was a good presentation, definitely helpful for everybody. But one more thing on this, it doesn't mean that your score will go down based on your income, but please know that if you go to apply for a loan, the income comes into play based on how much you can afford when it comes to the payment. So it doesn't mean that it's not going to impact your qualifying for a loan. It's just not going to impact the actual score itself.
Thank you. Thanks for that. All right. So we have another myth or fact. So using your debit card responsibly will increase your credit score slightly, but less than using a credit card will. Myth or fact? All right, we're kind of, I was going to say at some point we were kind of 50-50, but now it seems like myth. Some of you undecided out there? All right. All right. Okay, looking good. All right. Well, myth it is actually. So I'll let Vanessa share a little bit more about this.
Yes, your checking account actually does not hit your credit. So that debit card will not show as monthly payments or any type of usage there, thankfully, because I think I use mine like 5 times a day. I don't know what shape I'd be in if it did report to my credit bureau. I'd definitely stop at Starbucks way too much. But the debit card does not hit your credit, does not show on your credit. But the credit card definitely does, because you actually had to go through qualifying, look at your FICO score in order to qualify for that unsecured debt. You're borrowing someone else's money. When you're using your own money, we're not too concerned unless you're saying that you want to apply for an unsecured loan. What I will say on this, though, is even though your debit card daily transactions do not report to the credit bureaus and don't impact your credit score, what can have an impact on your credit score when it comes to a checking account is charge-offs. So let's say you swiped your debit card and you didn't watch your budget, and now you're overdrawn and you can't pay the fees and you can't pay the balance back on your checking account. Now you get reported to the collection agencies. So even though those daily usages, as long as your checking account is in good standing, it's not impacting your credit. The minute that it's not in good standing anymore, that credit, your bank can actually report that account as a charge off.
Okay, thank you. That's great information. Thanks, Vanessa. All right, and so one more question for you, but this is not a myth or a fact. So how did you find today's lesson? Let us know. Do you feel lost? Did you understand some things, or was this helpful to you? Did you learn a lot? Awesome. I'm liking the green. Great job. Awesome. Well, we're glad that this was helpful for you. And so now we will take it. We're going to go ahead and take some of your questions that I know you're anxious to hear about. And we're going to go ahead and let Vanessa respond to some of your questions.
Thank you so much, Carla. So yes, Vanessa, I do have some questions for you. And I do want to let everybody know that there's still time for you to type your questions in the chat so that we can have Vanessa answer those for you. So Vanessa, a student's asking, is it recommended to pay the minimum only or pay it back in payments, not in full?
Okay, so let me understand this. Are we talking about a credit card or are we talking about maybe an auto loan?
I believe they're talking about a credit card.
Okay. So again, it depends on the situation. So paying the minimum payment is always encouraged. You know, if you don't make that at least the minimum, you're going to show as late. So always make the minimum when you can, or if you can. Paying extra is not going to hurt. I always encourage you to pay down the principal if you can, because then you're not paying interest on that balance. So don't carry the balance unless you absolutely have to. But I would like some clarification because I definitely want to make sure I'm answering this question. When you're talking about payment plans, are you talking about maybe letting something charge off and creating a payment plan? Is there, whoever answered that, is there a way to clarify what that question might be around?
So they did say that it's about a credit card.
Okay. Well, I don't know if this also is alluding to some of those credit cards now saying, hey, you can make this large purchase a loan. As long as you're paying the loan installment that they build into that credit card plan on time and as agreed, it should not have a negative impact on your credit score. And you're also paying down the principal and interest at that time. So I don't know if that helps. I hope it did. But I have seen some unique things built into some credit lines recently when it comes to turning those into installment loans and making set payments so that they are paid off over a set period of time. As long as you're not going into a charge-off state and then making payment repay plans, you should be in good shape and you should be able to maintain that good credit score.
All right, thank you. Next question. Does adding an authorized user to your account impact your score?
No, it does not. It does not. Yeah. Now, it will impact your score if that authorized user is irresponsible and maxes out your credit line. So unless you are truly comfortable with who you're adding, don't do it. And please note, a lot of the time, if somebody's already had the chance to build their own credit and maybe wasn't responsible with it, they might not be responsible with yours either. So before you decide to be a co-signer or add someone as an authorized signer on one of your accounts, make sure you know their full story.
Great, thank you. Next question. I have 3 credit cards and a store card and only use them a few times a year to keep them active. Is this minimal activity still making a good impact on my credit? My score is in the high 700s, so I'm assuming I'm doing something right.
Absolutely. Yes, if you don't have to carry balance and you don't have to use it, don't. But also, like you mentioned, you're keeping them active. So one credit card transaction a year could keep that account active. So just make sure you look at your terms and your agreement, because it'll say on there, we review this account annually based off of any changes that are made. We could close this account, or if you're not using it, we can close it. So make sure you know the terms in the agreement that you signed up for when you took out that credit card. But you're doing great. If you're still just using them to keep them active or only for emergencies and you're paying it down, you're absolutely doing the right thing.
Thank you. Is it safe to have money in savings instead of an asset due to inflation?
So I'm going to be honest. That sounds a little bit like an investment conversation. So I'm going to steer away from giving any type of investment advice because you need to speak with a licensed advisor. But it also depends on what type of assets you have. So if you really want to look at your portfolio and see what your financial picture looks like, see an advisor with who you bank with. Of course, I'm biased. I'm going to say 1AZ advisors are the greatest, but no matter where you bank, you should be able to get some of that advice. So it all depends on how much your savings account is earning you with rates these days. It also depends on if your asset is depreciating or appreciating. There's a lot of things that go into that question. I wish I could be more specific, but you definitely want to sit down with a financial planner and look at your full portfolio before we can give that advice.
Thank you, Vanessa. And we can share that information with the audience at the end of the presentation. Now, the next question is, I live in North Carolina. Can I still open up an account?
That's a tricky one. So if you are here for school and you have a physical address, yes, you can. If you are out of state, unfortunately, we cannot have you as a member of the credit union. That's most credit unions. You actually have to live or work or worship in the state of Arizona if you want to be part of an Arizona credit union. But if you have questions, you can always reach out to us and we'll be happy to answer any of them. There are some things that could go down, like getting a sponsor. Maybe somebody that already banks with us can sponsor you to have an account, but you'd want to reach out to us to see what your options might be. But also checking with your local credit union, because all credit unions are great.
Thank you. How do you go about filing a dispute on your credit report?
Okay, there's a couple of different ways. It depends. If it's showing up on all 3 credit bureaus, you can go directly through credit apps sometimes to file those disputes, and they'll send them out to all 3. Or you can look at each credit report company individually, Experian, Equifax, and TransUnion, and dispute them by mail or by phone. Online is actually the easiest way to do it. Sometimes it won't let you do it online depending on what the dispute is. They might need more information. They might need to verify who you are. But start by going online. Again, Experian, Equifax, and TransUnion, all of their information can be found online, and you should be able to start a login and be able to do that dispute directly from there.
Thank you. What credit building opportunities are available through 1AC Credit Union?
Okay, we actually have a secured loan. And I'll tell you the difference between a secured loan and a secured credit card. And it's really up to you to decide what you think is best. So a secured loan through 1AZ Credit Union or anyone else that offers a secured loan, you actually don't have to run your credit to be approved. So you're approved regardless. You're using your own money and it's reported to all 3 credit bureaus. The secured loan option, you have to use at least $300 of your own money. This is with 1AZ Credit Union. But the nice thing is you get it back immediately. We turn around and we give you that cash right back and you start making your payments to yourself. And they're very minimal. A secured credit card outside of 1AZ Credit Union, we do not offer these. Ask questions because most Americans are paycheck to paycheck. If you do a secured credit card, you have to apply. They usually hold out a fee for an annual fee. You can only use typically 90% of the money that you put down towards this credit card. It can actually take you through 3 weeks to receive the credit card. So if you absolutely need the funds right back because maybe you are living paycheck to paycheck, the secured credit card might not be the best option for you. But 1AZ Credit Union does the secured loan, so you would receive your funds back immediately for you to be able to use.
Thank you. If a store credit card is closed for non-user by the lender, how does that affect my credit score?
Depending on how long you've had that account and other accounts that you have that might be in good standing, it can actually bring your score down. So if it was one of your longer standing accounts and it says closed by lender, it could be a flag when you go to apply for credit. Maybe not necessarily as much of an impact if you have other compensating factors or the good is outweighing the bad when it comes to other accounts that you've had, but it could create a small drop in your credit score depending on how long you've had that account and other items that are actually reporting still.
Thank you. Is it okay to have a store credit card and not use it? Or is it better to close that account if not using it?
If it's the only thing you have that's building credit for you right now, I would say keep it open. As long as you're using it responsibly, it's okay to have credit cards. It's okay to have 10 credit cards. Now you might say, Vanessa, you just told us not to have all these new accounts, but that's different. So once you start establishing credits over time, if you're older like myself. I actually do have probably 10 plus credit cards, but I started getting them when I was 18. I'm not going to tell you how old I am now. But over time, you start to accumulate 2 credit cards a year, or maybe, every couple of years, they start to add up. It doesn't mean that it's a bad thing to have a credit card. So if you don't have any negative history reported and you're not taking out 10 credit cards within a year, it's okay to keep those open. Just use them responsibly. I might have 10 credit cards, but I have 0 usage on all of them. And I might only use them every now and then just to keep them active, or maybe earn points and then pay it off. So as long as you're using it responsibly and you're not getting annual fees, then I wouldn't see any reason why you would need to close it.
Okay, thank you. Can you request a report from the 3 creditors at the same time, or will that count as an inquiry?
Anytime you check your own credit report or score, it will not count as an inquiry. Some of you might even know this, but there are apps where you can check your report and your score every single day. I know that there are certain credit cards. I think Chase might be one. I know we offer this. We actually even have a checking account where you can check your credit and monitor, but you can check it every single day. As long as you're not applying for credit, it will not count as an inquiry. So the more you check it, the better. If you can catch an error ahead of time or quickly, then go for it. It will not have a negative impact as long as you're not actually applying for credit. And you should have access to all 3 credit reports through certain apps, especially on the annualcreditreport.com. It should give you all 3.
Thank you. Does refinancing a car loan affect your credit score?
It can. I can't say, for sure you're going to drop 20 points, you're going to gain 20 points, but it has some good and bad factors into that. So maybe your auto loan was your longest length of account, and now you've paid off that other loan to refinance and start a new one. That might make you dip a little bit. It's not going to have a huge impact, but it can also help with your rate. So if you're refinancing to save money, then it might be the best option. It's not going to ruin your credit as long as you don't have, multiple inquiries again, or multiple auto loans at one time, or you're not applying for a mortgage. I would say if your plan is to apply for a home in, the next 6 months or to even a year, you don't want to refinance your vehicle. But that one's a hard one because there are good and bad things when it comes to refinancing. You could see a dip if you've already had several inquiries and this is your 5th one. That could have a negative impact when it comes to your inquiries, and then also new accounts. If you just took out that auto loan 2 years ago and you've opened 2 credit cards since then, now this is your 3rd new account. So you have to really look at your own story and see if this is going to negatively impact your inquiries or negatively impact your longest standing account. Each person's report is different and unique to them.
Thank you. How does the secure loan at 1AZ help or hurt our utilization?
It's a loan. So actually it does not count towards your utilization. It is a fixed set installment. So basically you say a minimum of $300. You can put more in if you need to or you want. And you say, I'm going to be paying X amount of money every single month for the next 2 years. That payment doesn't change. You can even pay it off early, but it's an installment loan. So once those 2 years are up, your loan is paid off and the account is closed. When we look at utilization, we're looking at revolving lines. Those lines where once you pay it down, you can use it all over again. A secured loan, once it's paid off, it's closed out. We don't use it again until you reapply for one. Typically by then, though, you can apply for a credit card without having to use your own money.
Okay, thank you. We have a couple more questions. Does paying on your student loan help your credit score?
Yes. I mean, if the payment is due, definitely pay it. There are a couple things here. We look at deferments. So it's not, if you're not in default on your student loan, you're absolutely in good shape. If you have a deferred payment, it's not going to necessarily bring down your score. It's when you start to default on those payments once they come due. But I will say, even if a student loan is deferred, some lenders will still take a payment into consideration, which could affect your DTI. DTI is what we consider debt to income. So It's not tied to your FICO, but it goes back to how much will allow you to borrow based off how much debt you've already accumulated and how many payments you have going out versus how much income you have coming in. So even though your student loan is deferred and you're not required to make a payment, some lenders will still calculate a payment, basically a what if payment, usually it's 1% of the balance, and factor that into your debt to income.
All right, thank you. And a last question. How long should you space out a car loan or refinance of a car loan if you want to buy a home so that it doesn't hurt your credit?
Yes, good question. You need to speak with your mortgage broker. This one is unique to everybody. Really, the rule is you don't want to apply for anything if you're going to be doing a mortgage. This doesn't mean you're going to be declined, but let's say you're on the verge of qualifying for a home. There's so many different home programs out there that require various credit scores or have minimum credit score requirements. So let's say you're going into a mortgage program and the requirement is 620. Now, you can still get a mortgage at 620. We've even done mortgages at 580. You can even get a car loan at 580. But if you need a 620 to qualify for a specific mortgage program and you refinance your car and your score drops to 618, you no longer qualify for that mortgage. So if you are planning on buying a home, I strongly advise you to talk to your mortgage broker. In some cases, your mortgage banker will say, go refinance your auto. And the reason for that is because it lowers your auto payment, which then in turn allows you to apply for more of a home loan. So maybe you were only qualified for $170,000, but they directed you, 1AZ saved you some money, they refinanced your auto loan. Now you're actually qualified to borrow $210,000 for a home. So it gives you a little more buying power when it comes to purchasing if you refinance something. But I wouldn't do it unless your mortgage banker says, if you do XYZ, this is going to benefit you and you're qualifying. These things are unique to each borrower. Definitely don't go buy a Corvette the night before you close, though.
Right.
And they do pull your credit score twice. When you do a mortgage, know that they pull your credit twice. So even though you qualified up front, right before you close, they're going to pull it again. So hopefully you didn't go max out your credit cards and buy all new furniture. And trust me, we see it happen all the time and it's devastating. So if you have any questions, you can reach out to us or your mortgage broker.
Thank you. Actually, I have 2 more questions that came in. Do you mind if we go over them?
Go for it. I think we have some time. Yeah.
Yeah, thank you. So is it true that the lower your credit score is, the higher your interest rate and monthly payments will be?
Yes, that goes back to the scenario with, I want to say, our 2 candidates who were buying that home and they saved a little bit of interest when she had a 750. Because you're a greater risk in the lender's eyes with a lower credit score, we're going to charge more interest. And the reason is we're going to try to recoup our costs ahead of time. So if you have a 580 credit score, your likely to repay is very, very low. But if a lender is still willing to take a risk on you, they're going to charge you a higher interest rate so that if you do default or we have to charge you off, we at least made our money back up front by charging that higher interest rate. So that is why you typically get a higher rate when your credit score is much lower and can cost you a lot more money. We saw in that mortgage scenario, I think it was a $34,000 difference on that mortgage scenario from having that difference in the credit score.
Thank you. And then last question, is there any courses on credit you recommend or offer through 1AZ?
Yes, you can go onto our website and we have a whole page for financial literacy. You can watch different videos from people we partner with that are experts. Again, I mentioned GreenPath early on. They helped us create that deck and that presentation. They're a great resource. They also are free. They'll do credit counseling. They are not a credit consolidation company, by the way. Stay away from them. I've seen people that have gone through credit counseling, but it's actually a debt consolidation company. They charge several fees. And a lot of the time they'll put you in delinquency, which can actually hurt your credit score even more versus going into something like credit counseling with maybe your lender sitting down, going over your credit report with your banker, or going through something like GreenPath where it's free credit counseling. And they're going to guide you into what to pay off first, look at your income, and really give you some strong, solid advice versus taking fees and putting you in delinquency and having judgments out against you if you go through one of those consolidation companies. So be very, very careful of where you go to seek that advice from. My biggest advice is go to your existing bank or lender. Your personal bankers are there to help you with that. But you, again, can also look at GreenPath. They're a great resource.
All right. Well, that concludes our questions and answers. Thank you so much, Vanessa, for your time and your expertise on this important topic. We do want to provide this information about the handout for additional information and practice. You're more than welcome to scan that so that you can have this in case you ever need it. And I believe now it's time to announce our social media prize winners. Again, thank you everyone who followed us on our social media accounts for First Year Experience and the Office of Financial Aid and Scholarships. Those who followed us were entered in a drawing, and the following people are our winners. Congratulations to Rachel Espinosa Flores for First Year Experience, and Jessica Painero from the Office of Financial Aid and Scholarships. You both won a prize bundle from Pima Community College First Year Experience and the Office of Financial Aid and Scholarships. Please view the screen to see the prize bundle. We will send your prize package to the mailing address listed in your Pima profile. Please allow a few weeks for us to get the prizes packaged and delivered to you by mail. If you do not receive it by this time next month, please follow up with us so we can track down your prize. And again, thank you so much for following us on social media, and congratulations. If you would like to test your luck again, there is another prize opportunity. All you have to do is visit the partnership webpage between Pima Community College and 1AZ Credit Union. Please see the screen or the chat, the direct link. Sweepstakes begin Thursday, April 6, 2023, and will end Tuesday, April 11, 2023 at 5 p.m. The winner will be selected by Thursday, April 13 by random drawing. The value of the prize is $100, which includes a $50 Office Max gift card and an Adidas backpack. The prize will need to be picked up at one of the 1AZ branches. We want to thank you all for attending the last Money Matters session of the spring semester. We hope that you found great value in the information shared today and that you enjoy the session. This series will return for the fall semester, and the schedule with topics and dates will be shared soon on our OFAS events webpage and Pima Engage. Links to those pages are being shared in the Zoom chat. Also, if there are topics that you would like us to present in the future Money Matter events, please let us know through the survey. By you completing the survey, you will also earn a certificate of completion, which will be emailed to you in the next few weeks. Just a friendly reminder that when you attend all 2 Spring Money Matter sessions, you will be entered into a drawing for a $250 award to be applied to tuition at Pima Community College for the summer 2023 or fall 2023 semester. Well, this concludes our presentation. A huge thank you to our partners from 1AZ Credit Union and our partners from First Year Experience, and of course the Office of Financial Aid and Scholarships for making this event possible. And a huge thank you to you, our community, for attending. If you would like to follow up and contact us, here's our information. It's being shared on the screen, and we look forward to seeing you again next semester. Thank you.
Thank you, everyone.
Have a great night, y'all. Thank you.